Welcome to this Tactical Masterclass Explainer. Listen, if you're a focused learner gunning for that top A-star grade in IGCSE Accounting 0452, well, you're exactly where you need to be. Today, we're unpacking Module 17, the General Journal Procedures. And look, this isn't just about balancing books. It's about the exact technical execution and the cause and effect analytical thinking that examiners absolutely demand. We're going to blend the deep dive precision of a subject specialist with the high-stakes insider secrets of a senior examiner. It's going to be great. So, here's our roadmap for today. We'll start off with the core 2026 concepts, move right into technical execution, transition over to AO3 evaluation, and finally, we'll crack open the examiner's playbook. Let's get into it. All right, Section 1, 2026 concepts. We're talking international terms here. We're laying our foundation with a really strict expectation from the examiners. They want literally 100% accuracy with modern international terminology. Take irrecoverable debts, for example. That's money a business fundamentally cannot collect, usually because a customer has gone bankrupt. Or owner's equity, which is the owner's residual interest in the business assets after all liabilities are paid off. Mastering these, it's not just some vocabulary exercise. It is your core architectural requirement. You're basically building the fundamental bridge between raw data entry and high-level financial intelligence, ensuring the accounting equation always perfectly balances throughout the fiscal period. Now, think about the prudence concept. It's essentially our protective shield against overstating profits. But sometimes that clashes with the historical cost principle, which is much more rigid, focusing on past prices. Students actually lose marks all the time because they overstate profits by ignoring potential losses, which completely breaks that prudence shield. When we look at terminology like accrued, prepaid, realization, and consistency, you really need to apply them to complex scenarios. Doing this guarantees the transparency of financial reporting that external parties, banks and tax authorities, completely rely on for their annual decision-making. Moving on to Section 2, Technical Execution. It's time to adopt what I call the method mark mindset. When you're facing down complex calculations under immense pressure in the exam hall, procedural logic is your absolute safety net. We follow an exact, step-by-step procedural flow. It all begins with identifying the correct source document, whether that's a sales invoice, a credit note, or maybe a bank statement. From there, you move seamlessly into the books of prime entry. Then you populate your T-account structure, and finally, you extract those balances to achieve a perfectly accurate trial balance. So, the crucial point here is you absolutely must secure your method marks by clearly showing your workings. In the IGCSE exam, these marks are given for your procedural steps. Even if your final mathematical balance is dead wrong, provided your logical flow is clearly visible to the examiner, you save your grade. Seriously, show every single step of your workings, especially during complex adjustments for things like depreciation or inventory valuation. Make your logic visible, and you survive the question. It's that simple. All right, let's avoid stepping into some mathematical bear traps, shall we? You have to clearly distinguish between calculating percentages for trade discounts, which happen right at the start of the transaction, essentially snipping the price down immediately, versus cash discounts, which happen way later upon payment. Mixing these two up, that's a classic, painful trap. Oh, and also, when you're dealing with manufacturing accounts, including state symbols is absolutely vital. Having precision in these little details prevents massive, cascading errors down the line. Now, the T account, it really remains the gold standard for representing the double entry system. You just have to master the absolute necessity of balancing these accounts correctly at the end of the period. This means clearly distinguishing between your balance carried down, which is the figure that closes the current period and balances the two sides, and your balance brought down, the opening figure that restarts the scale for the brand new period. Get those right, and you're golden. Okay, Section 3, AO3 evaluation. This is all about understanding cause and effect. This is Assessment Objective 3, where we step away from baseline calculations and really start debating cause and effects chains. Let me ask you this. What if a business's current ratio drops drastically from a healthy 2.5 to 1 down to a really worrying 1.1 to 1? Calculating that ratio, that's just a baseline skill. But for an A-star AO3 response, you must evaluate the cause. Did the business overpurchase inventory? Are trade payables being settled too slowly? Or perhaps cash reserves were entirely depleted due to some massive capital expenditure? You've got to be asking these high-level questions. Inter-firm comparisons present another major AO3 challenge. Just imagine trying to compare two competing businesses. One uses the straight line method for depreciation, dropping the asset value evenly over time. The other uses the reducing balance method, creating a curved drop over time that's much heavier in the early years. Because of these differing accounting policies, direct comparison becomes incredibly tricky. It forces us as analysts to look way beyond the surface numbers to understand what's really going on with those assets. And, well, this perfectly leads us to the quality of profit. Real long-term sustainability and a strong return on capital employed rely heavily on analyzing non-financial factors alongside your financial metrics. Things like staff morale, physical business location, and market reputation. They simply aren't captured in a general journal. But make no mistake, they are absolutely vital to the ultimate survival and profitability of the business entity.
All right, let's bring it home with Section 4, the Examiner's Playbook. It's time for some high-stakes warnings. Straight from the 2024 and 2025 Principal Examiner reports, consider this a major wake-up call. The examiners are explicitly warning us that students are throwing away marks due to something as ridiculously simple as poor handwriting in ledger accounts. Literally, when an examiner cannot read your numbers, you lose the mark. Furthermore, failing to classify items correctly, specifically mixing up revenue and capital items, completely destroys your accuracy and will wreck your time management during the paper. Under extreme exam pressure, your mind can just go completely blank. So here's a really powerful exam memory hack to lock into your brain right now. Revenue is routine, capital is core. Think about it. Revenue expenditures are your everyday routine running costs. Capital expenditures are your core long-term asset purchases. Just remember this simple phrase to instantly classify items and secure the specific weightings of those questions. It's a lifesaver. You know, it's also vital to connect these rigid syllabus procedures to the real world of 2025 and beyond. Modern AI-driven financial platforms, like Xero, for example, they handle these exact same dualities and general journal procedures. The fundamental accounting equation and the logic of double entry remain exactly the same, even when they're automated by cutting-edge fintech. By mastering this now, you aren't just passing an exam, you are quite literally learning the true language of modern business architecture. As we wrap up this explainer, I want to leave you with a final slightly provocative A-star challenge, one that perfectly merges modern reality with AO3 evaluation. Pause for a second and really think about this. How would an unrecorded non-financial factor, like a severe drop in staff morale, eventually impact an AI-generated current ratio that is already sitting dangerously at 1.1 to 1? Pondering that exact bridge between human factors and raw accounting data is what truly makes an A-star student. Keep questioning the numbers, secure those method marks, and for sure, you are going to dominate your exam.